Okay, so this is a trend following strategy, and it's a very simple one to follow. So, what you need firstly are two exponential moving averages. So, that's one over there, and that's two. So, we close that. And the settings for the first one, we're going to change the length to 20. And for the style, I like to change the colors to white and yellow. So the first one I'll make white. I'll increase the thickness a bit. You can use whatever colors you want. I just prefer white and yellow. The second EMA, click on settings. We'll make this yellow. And then we'll make it the length. We'll make that 50. Click OK. And lastly, we are going to change the candles to Heikin Ashi candles. And that's essentially all you need for this strategy. So what you're doing here is you're looking for pullbacks either to the 20 or to the 50 EMA, but it cannot go past the 50 EMA. If the price goes past the 50, then the trade is void. So for instance, like here it goes past the 20, and then here it goes past the 50. If it goes past the 50, the trade is void. So what you want to do is look for setups where this is a good example, so I'll just explain it with this. Setups where the price is above the EMAs, so there's space in between them. So if you see all this space there, and you also want to make sure that there's space between the two EMAs, all the space here. That's what you're looking for. Space between the EMA and the price, space between the two EMAs. Okay, let's get rid of that. All right. So you're then looking for the price to pull back again to the 20 or to the 50. And then you're looking for either a bullish or bearish Heikin Ashi candle, which is basically a candle without the lower wick, right? So something like this. There's no wick. Here has a wick, here has a wick, here has a wick. So you want a bullish one would be something like this with no wick, like this with no wick. A bearish one would be like this with no wick. If you look here, there's a little wick. I wouldn't touch these. Some people like to use them because it's a small wick, but personally, I'd say just leave those. We just want the ones that are without the wicks. Okay, so let's look through a bit. So these ones here, you can see the price is essentially hugging the moving averages. So you would ignore all of these, and the moving averages themselves are very close together. They're parallel almost, as opposed to this that has a nice slope to it. So let's see, we're going. Okay, here's one. So here, the price is away from the EMAs. There's a space between them. Um, it's sloping. Then you have your pullback past the 20. It comes back. The first bearish Heikin Ashi is one that doesn't have a wick. So you would have entered in here. All right. Let's see if there's another one. Okay, this is a good one. It's a really long one, but it's a good one. So again, space between these two, pulls back. First one, enter. It pulls back again. Another bullish, no wick. You would enter there. As far as your stop losses, what I like to do is I like to put the stops at the bottom of the Heikin Ashi candle that I entered in on. So if I entered in here, I put it here, down at the bottom at the base of it. If you like, you can also put it at the previous swing low or swing high. So in this case, you could put it down here. Or if you want to use an ATR for your stop loss, you can use that as well. As far as your take profits, I'll leave that up to you. You can exit however you like. You can use ATR to exit. You can use support resistance points to exit. You can use previous swing highs or swing lows to exit. However you like to exit, you can do so. And then the last thing, of course, is you want to confirm the trend on the higher time frames. I'm currently on the 4-hour time frame. This doesn't work as well with the lower time frames. Most strategies don't work as well with the lower time frames. So I would recommend you guys stick with 4 hours or daily or even an hour. Anything less than that, there's a lot of noise. So with this, you can, before you even look to enter, you would go on the higher time frame on the daily just to confirm, it is an uptrend or it is a downtrend. Right, so this was the long one that we were looking at. And as you can see, it's making higher highs and higher lows. All right, so that's an uptrend. Let's go back to the 4-hour. Oh, where did it go? There it is. Okay, and that's essentially the strategy. It's a simple one. Play around with it. Figure out where you would like your stop losses and your take profits. And that is all there is to it. I will be back with another strategy in the next video.